Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With me, as always, to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Summertime is officially, I know we're like a week and a half away from the official start of summer, but I think the weather has officially flipped the switch to summertime.
Yeah, that's right. It's time to get those grills fired up, right? We need some more meat demand, and what a good time to get started here.
Oh, and we're going to talk about supplies and demand of beef and pork coming up in a little bit. We'll talk livestock slaughter this week. We're going to talk cattle on feed numbers. Got a question from a viewer this week. But to kick things off, let's recap what happened this week in the markets.
Yeah, on the cash cattle side this week, we were down $2.10. Those feeder cattle markets this week were anywhere from $1 to $3 lower. On the future side, the June live cattle futures contract was down 60 cents, and the August feeder cattle contract closed down $4.40 this week. We did get some strength on the choice box beef price this week. It was up $4.20. That now leaves it $62 below where it was a year ago at this time. On the hog side, cash barrels and yields were 45 cents lower this week. We did see some positives on the future side with June lean hog futures contract up $8.30. The pork cutout value also gained this week, up $3.10, really all driven by what was much stronger bellies this week.
Everybody loves their bacon. I will say, though, it's been interesting watching cattle futures the last couple of weeks. We were down hard a week ago. When we take a look at feeder cattle, down sharply again this week. It'd be nice to see some positive momentum there as we look ahead.
Yeah, I certainly think we're seeing futures who look out there and see the inflation concerns that are there and worry about, what's that mean for cattle prices going forward. I think as we go here this afternoon and we talk about the supply side, perhaps we are going to see some strength in prices as we look ahead.
All right, let's talk slaughter numbers as we take a look back at this past week. How did things stack up?
Yeah, for the week ending May 21st, USDA is estimating a run of 680,000 head of cattle this week. That's actually up 23,000 head from a week ago and up to 8,000 head from a year ago. And on the hog side, a bigger run of hogs this week as well. 2.414 million head of hogs is the called run this week. That's up 39,000 head from a week ago and up 23,000 head from where we were a year ago.
When we look at percentages and how things are kind of stacking up year to date, are we surprised where things are sitting, or is this kind of what we had expected from the start of the year?
Yeah, so I'd say for the most part, expected. When you look at what's happening on the cattle side of the equation, we're up 0.7% year to date in terms of cattle slaughter. That's not too surprising. Again, I don't think we can probably continue down that road forever. And even on the pork side, as we think about what's been reductions in breeding inventory, it's translating into what's now 4.9% decline in barrel and gilt slaughter year to date. So both those aren't surprising. Very different in terms of their impacts, as a lot less pork supplies on the market relative to what we see on the beef side of the equation.
All right, let's talk livestock slaughter numbers. Big billions. It's gonna be the way to describe both beef and pork production.
Yeah, so if you look at what we've seen for the first 4 months of this year, commercial beef production at 9.35 billion pounds, that's up 1.1% from where we were a year ago at this time. But maybe even more impressive, up nearly 11% relative to the 2016 to 2020 average. So tells you we've been growing in terms of beef production. On the pork side, a little different story in that January through April, commercial pork production came in at 9.11 billion pounds. That's actually down 5.5% from where we were a year ago at this time, and only 3.5% above the 2016 to 2020 average. So that makes a little bit of the difference between what's going on in beef markets versus pork markets. Now, you have to talk beef cow slaughter here. It's the continued story that makes me go, wow, we're going to be a lot tighter on supplies of calves down the road, given what I see happening. So January through April, beef cow slaughter as a percent of total beef cow beginning inventory came in at 4.2%. Megan, that's the largest going all the way back to 1980. So we're clearly talking about reductions in cow inventory. So I'll just remind us, in 2021, the first 4 months of 2021, beef cow slaughter was 3.6% of beginning cow inventory, and we saw a reduction of 2.3% in the beef cow herd. Now we're talking about 4.2% in the first quarter of 22. First 4 months of 22. What's that mean for beginning inventory of beef cows January 1 of 23? We could certainly talk about a much smaller herd than we've seen for a while.
Knowing what we know, thinking about inflationary concerns, thinking about demand, how does that potentially set us up? And I don't want to take away from our thunder when we talk about cattle on feed numbers here, but how does that set us up for supplies and demand, thinking beyond current picture? So looking ahead to 2023, looking ahead to 2024.
Yeah, I think this story is important. We're likely going to have higher beef prices as we look ahead, and that's a little bit conditioned on, number one, demand staying with us, but number two, what's going to be much tighter supplies. I can't say much enough. Tighter supplies of cattle and beef, especially as we get further into 2023 and into 24. It could be a very interesting couple of years in terms of just where prices go, given what we've been seeing on the beef cow slaughter side. And I've talked about previous cattle on feed reports where we do get estimates of the percentage of on feed that are heifers. We know we're not holding back from the best we can look at that data. We're not holding back heifers to go in the herd either. So drought, poor economics, stronger returns, I should say, to crop producers. Maybe all those things are factors in what's a tightening beef cow inventory situation.
We know that potentially this leads to higher prices, but do those higher input costs as well maybe dull the bright spot that could be higher cattle prices?
Yeah, so record high cattle prices does not equate to record high profitability. And you're wise to point that out for us. Hay stocks in some parts of the country, 40-45% below where it was a year ago for May. So we know we've got a lot of tight hay supplies, and we know we've got record high fertilizer prices. The news is full of just how high diesel prices are today. All those things just remind me to say the margin at the end of the day is not as strong as where cattle prices might go. We'll have to wait and see. And the other piece of that is, with record high cattle and beef prices, do consumers ever shift away? We might be in a situation where beef prices go up a lot more than we might see from the other competing meats, and that might get us some substitution that we haven't seen thus far.
All right, let's talk cattle on feed as we take a look at those on feed numbers for May 1. Tell me what you got.
Well, so we got another month of a lot more numbers than we anticipated pre-report. So we've kind of been singing out of this same page of the hymnal here for a few months now, and it hasn't really changed. When you look at the numbers we got, so on feed as of May 1st came in at 102% of a year ago. When you look at placed in April, came in at 99.1. Both of those numbers are outside the upper end of the pre-report estimates. Now, I'll for a minute just stop and remind us, 15 or 20 years ago, we had a lot more folks doing pre-report estimates than we have today. So it's a much thinner set of estimates. That is not me speaking poorly of those that are doing pre-report estimates, but it's a much smaller group than we once had. But again, we fell outside the upper end of the range. By and large, you would probably say that's bearish for markets. in at least the short run. I don't think we can keep doing this, though. Back to the story of fewer cows, pulling cattle forward, whether it's off a wheat pasture or other drought areas of the country. We just won't continue to do that forever. And so although this report shows very strong placements, I think it could be one or two reports away before we really talk about some serious lower placement numbers, hopefully, as we look ahead.
So this segues nicely, I might have done this on purpose, into our question that came in from viewers this week, talking a little bit about, they continue to hear about more cattle in every cattle on feed report, more place, more on feed, but we're also continuing to talk about droughts, fires, floods, people quitting the cattle business or exiting the cattle business, liquidation sales. How do these numbers, how do we make sense of what we're hearing and what we have on hand?
Yeah, so it's a good question. I will just continue to remind us that we will keep doing this. And I say doing this being large placement numbers or larger than anticipated placement numbers. We just cannot continue to pull these cattle forward like we were suggesting. When we look at beginning inventory of calves eligible to go in the feed yards, we're pulling a larger percentage of that potential placement, much higher percentage of that than normal. And that just can't continue. Now, if I wanted to be a little more negative in my response to that question, it's that we're missing something in terms of the USDA data that we're all looking at. But we got to be missing a lot for that to be the case. So again, I'll come back to say we aren't holding heifers back because the percentage of heifers in feed yards are large. Cow slaughter, which it's hard to have too much of a error in cow slaughter, has been continuing to run very large. We know we got drought in many parts of the country. I mean, all those things tell me that, yes, we can pull forward. We've been pulling forward here, but it won't continue. And I come back to even USDA, right? So last week, USDA gave us their first look at 2023 meat production. And on the beef side of the equation, a decline of nearly 2 billion pounds. I don't know when's the last time we would have had that kind of decline, but I think it's been several years. It reminds me to say everyone is in this camp of supplies are going to get a lot tighter as we get into 2023.
So we have pulled them forward until we can't anymore.
So there is a limit, right, to how far we can pull forward, and we're certainly getting a lot closer to where that limit is. And yet another month of stronger than anticipated placements just reminds me to keep saying the day of smaller placements is coming.
The limit does exist.
It does.
All right. So that's all we have for this week. As we look ahead to next week, what will you and Sir Will Robinson be talking about? Because I will not be here next Friday.
Yeah, well, we're going to talk about you, but most importantly, we're going to talk cold storage on Monday, and then we'll get a ag trade outlook on Thursday from USDA in terms of what they see happening in the coming quarters.
Thank you for keeping my ego in check. I am, in fact, not the most important person and topic in this conversation. Scott, it's always great to see you. Thanks for letting me pick your brain. I will see you in 2 weeks. Everybody else will see you next Friday.
That sounds great, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And if you want to check out on the commodity side of things, so the grains and oil seeds types of conversations, Will Robinson and Scott Brown's little brother, Ben Brown, have their weekly commodity market update that comes out on Tuesday afternoons. Have a great weekend. I'm Megan Grevner for Brownfield.